All right, and we're live. Holy cannoli, where do we start? It seems that the Trump bump is turning into a Trump slump. Last week was the worst week, the worst weekly loss, since September. Today's stocks continue to slide, trading below the 50-day moving average, trading below the 200-day moving average. The selling intensifies, and right now it doesn't seem that anything can stop the markets here. Trump also had an interview yesterday speaking on recession fears, and we'll take a look at this. Nvidia further down, Tesla down for 7 weeks in a row, the longest losing streak in 15 years. What's happening there? And then this week also CPI and PPI data, important inflation data coming in. So as you can see, we have a lot to talk about. And with that said, let's get started. And welcome to Coffee with Markus and Mark. And today is March 10th. And in this show, we are going to talk to you about what's happening in the markets and how we are trading it. Boy, Mark, look at this. I mean, just sliding. I mean, at first, slicing through the 50-day moving average. Now, slicing through the 200-day moving average. That is the S&P 500 that we are seeing here. And this is the level where we were before the election. Right now, trading well below.
Look at that. Will it ever stop? I don't know.
I mean, at this point, I mean, if you're just zooming further out, right? I mean, since usually we see support at the 200-day moving average, often we even see support. Let's just zoom out a little bit so that we can see it, right? So often we see a little bit of support here around the 200-day moving average. Then we have it typically somewhere at the 50-day moving average, right? But right now, it seems that markets are almost in free fall here. We're also, I mean, the round levels that we usually have, 5,800, 5,700, they don't hold. I mean, we're just continuing to slide here.
Yeah. I mean, it will let up. But the bottom line is tariffs are messing up the stock market. And it could be that big picture, it doesn't matter. And it is a good thing for the U.S. economy. But as far as investors are concerned, as far as traders are concerned, investors are saying tariffs equal more expense equals no Fed cut equals sell stocks.
Well, yeah, plus, I mean, we also talked about it this morning with our mastermind, right? So is this really good for the US economy? Because we know that when China faces some pressures, China adjusts their fiscal policy. They just pump money into the economy and they'll be just fine. So if China gets temporarily hit by these tariffs, no problem. The European Union, right? I mean, they lowered interest rates last week. I mean, we haven't been able to talk about it because we're now once a week here, but last week they lowered interest rates. So the European economy is also strong. So they could provide more financial stimulus to make sure that the European economy is booming. Canada just voted a new prime minister. And this is breaking news this morning. So we have a new prime minister in Canada, and it doesn't seem that he is backing down. So, I mean, at this point, these tariffs, and this is what traders are looking at. The tariffs could actually hurt the US, at least in the short term, before it gets better. And this is where we also see the VIX, the fear index this morning trading at levels that we haven't seen since the December slump, where we had a quick crash in September. And other than this, look at that. The last time it was the August sell-off where the VIX was trading at these levels. So fear and uncertainty is back in the markets.
Yeah. And at the beginning of, when President Trump was elected, it was about economic optimism and pro business, pro business friendly policy. And right now, people are talking about the R word again and recession. And will we go into a recession? And then President Trump was asked, and he said that the economy is going through a period of transition, which didn't really give investors much confidence.
Right. And this where he also said, well, we're bringing wealth back to America. Let me just zoom in here so that we see it. And he then added, it takes a little time. It takes a little time. And this is where so the uncertainty continues. And right now, I mean, we shouldn't bet on Trump to save the stock market. I mean, he made it kind of clear that he is willing to tolerate some more pain here in the stock market before it gets better.
I mean, that could change in a day. That's the flip side of it.
Right.
But I agree.
Yeah. And I mean, we see what is really today. Look at this super interesting heat map when we look at this. What
Yeah.
is driving this move lower right now? It is our magnificent seven. It is Nvidia, Microsoft, Apple, Google, Meta, Amazon, all down 5% plus. I mean, Microsoft still hanging in there, but Nvidia down more than 5%, Apple down more than 5%, Google, Meta, and Tesla down 8.9%.
That Tesla is just looking ugly right now. Uh, we were looking at it earlier today, but down 50% from those highs.
Yeah, let's just bring up a Tesla chart here because, yeah, I mean, this is where
In like a
Tesla,
couple of weeks.
yeah, is now also trading below the levels before the election. And yeah, as you said, I mean, this retracement here, more than 50%. So, I mean, more than $800 billion in market cap wiped out from Tesla. And I mean, for me, the question is, how long will Elon Musk tolerate this? How long will he say, oh, yeah, you know what, Trump, I'll run your Doge department and cease just the market capitalization being destroyed from his company? Now, you might say, well, this was the Trump gift, and this is where taking it away. So, kind of trading at these levels. However, I believe once we are breaking below 200, Elon might say, you know what? Screw that. I'm going to focus on my companies again because that is actually my wealth. So who knows? I don't know what kind of agreement they might have, but it's definitely interesting to see and also to watch how much longer will Elon watch that.
It will be interesting. Speaking of interesting, did you see that DoorDash will join the S&P 500, but Coinbase did not make the cut?
Yeah, and DoorDash this morning at first was trading higher. Right now, also being dragged down with the overall market. And disappointment for for Coinbase, and Coinbase already was trading down in the last few weeks because cryptocurrencies were trading lower, and we are off what 45% also from the high, and today a 10-11% slide.
Yeah, pretty sharp drop there.
Yeah. Also, I mean, interesting. Where do we stand right now with the largest American companies? Look at that. Nvidia down on three. The king or the queen is dethroned, whatever you want to call it, Nvidia, king or queen. Done. I mean, was the number one taking over Apple, Microsoft. And right now, I mean, falling down to number three. Oh, that's quite something.
Yeah, and I mean, can Amazon take that spot? If a year ago, 6 months ago, it seemed like Amazon was in the dust compared to where Nvidia was.
For sure, for sure. And also look at Broadcom, the darling, and Tesla now trading below $1 trillion market cap. And I mean, this is what we saw in the top 10 was basically solidly above $1 trillion in market cap.
Yeah, yeah, interesting.
But it's also interesting to see that, okay, this sell-off is not only contained to stocks. I mean, this is where we also see Bitcoin, cryptocurrencies have been selling off, even though President announced the strategic reserve. And look at this, interest rates. Now the 2-year yield trading below 4%.
That is interesting.
So it just, in general, Seems that
Yeah.
investors are taking money out of the markets. There's no rotation or anything. Well, there's a little bit of rotation. Okay, I shouldn't say no rotation, because if we go back to the heat map, we see what's happening.
Out of the
Out of techs,
Magnificent Seven.
risk off, going back into the good old, what do we have here? Consumer defense like Procter and Gamble, Coca-Cola up to date, energy up to date. Then we have utilities. Utilities are always good dividend payers, and that's what we see here today. Industrials. So we see that there is a little bit of a rotation going on. All right. Nothing to add. Let's take a look at the calendar for this week. So this week on the economic calendar, we do have more data coming in, and this time more inflation data. It is already time for the CPI and the CPI. CPI on Wednesday expected to drop from the previous month, but hey, the previous month we came in much, much hotter than expected. So right now expected both core CPI and CPI to tick up 0.3% for the month, still be at 2.9% year over year. And this 0.3%, that's not good. Because, I mean, if you would just come in at 0.3% and you take this times 12, this means that inflation would run at 3.6%. After we came on higher last month, we need a few levels where it is 0.1 or maybe even 0.0 unchanged, so that we can bring inflation down. So, I mean, good to see that it might not come in hotter, but traders and investors will definitely pay attention to this on Wednesday.
Yeah, big week for inflation data, and that could get the markets going too.
In addition to everything that is already going on. All right.
Yeah.
Let's take a look at what's happening and how we are trading it. First up, we had some new WTF signals. We had a total of 5 signals, Mark, and we decided to take 3 out of these 5.
Yeah, a couple of signals popping up, and decided to focus on the 3 that you have there highlighted. CCEP being one.
Yep. JP Morgan, another
JP
one.
Morgan.
Sorry, I think
And
we have a
SPG.
small lag. I need to wait 2 seconds before you talk.
Yeah, I noticed that. So 3 new ones.
3 new ones. We enter those today, in addition to the ones that we still have open. So open, Citigroup, Capital One. So right now, it seems a lot of stocks out of the financial sector. No surprise. The financial sector, I mean, with uncertainty, customers and also companies are not taking on credit, right? I mean, who is taking on the most credit? This is exactly these companies that we see here, the tech companies, right? I mean, you hear it about Microsoft investing billions of dollars, Meta investing billions of dollars in data centers, Nvidia investing in expansion. But right now, this is where, okay, financial sector is definitely getting hit when there's uncertainty in the market and when there's a tech sell-off. I'm just looking over if you're saying anything or if you just want me to continue. You're nodding. Smile and nod. Smile and nod. All right. Hopping over here. Oh, we had an exit today. We did not take GHAC, but if you did take it, today was an exit. We didn't take it because we did have the warning here that this symbol has been trading for less than 5 years, and therefore we have only limited data, and we recommend not to trade it. So we followed our own advice and did not trade it. All right. Mark, do you want to take the wheel trades so that I shut up and you can walk them through?
Sure. The only challenge is the chart's blurry too. So we definitely have a bit of an internet issue.
Sorry. Okay. CSIQ. Let's get started there. What do you think, Mark?
Yeah, I mean CSIQ looks like it's finding some support around $10. No surprise here with the risk off environment that CSIQ is down today, but it looks like we're seeing it settle around 10.
It sure seems this way. All right, nothing to do for us right there. HAL, Halliburton, bucking the trend.
So Halliburton making a move higher and adding to where it closed on Friday. So nice little move in Halliburton off of these lows, which is kind of what we were expecting once we got down to 24, 23.50-ish. We'll see if it continues today.
Yeah. Also a trade that we took last week, IWM.
Yes, IWM interesting because we were able to sell the 200 puts, and then I rolled them. I actually bought them back at 50% with Friday's rally, and then sold them again.
This is what we call DD, double dipping, and we're having fun with this. Coles. Coles had a
Yeah.
phenomenal day on Friday.
Hey, look at that. And earnings.
Earnings coming up tomorrow before the market open. All right, so nothing for us to do here today. Merck. Wow, Mark, what a move here.
Yeah, I know you were trying to do a rescue there. You did collect some premium, brought down your break even, hoping that it would have that V-shaped recovery and go to fill that gap, and it's doing just that.
Perfect. And then also our friend UPS doing the right thing here, also bucking the trend today up. What a wonderful recovery. Just keep going here and fill that gap. Go all the way to 134.
Yeah, that another one filling that gap, and that's exactly what we expected. Why we both decided to add to it after that earnings drop.
Yeah. So looking good. I mean, overall, especially if you look at these, markets are selling off. Merck moving higher, UPS moving higher, Halliburton moving higher. So, we're happy with these positions. And of course, we'll keep an eye on IWM, CSIQ, and especially Coles tomorrow reporting before the bell. So let's see what Coles has to say and what they think is going to happen here. All right. Off the charts, and before we go back and see whether the market still continue to sell off right now, or if they have found, at least on an intraday chart, a temporary bottom and might actually pull higher, it is the time of the day where even with a short delay, dad jokes. So let's see. Mark, what do you got for us today?
Well, I lost my watch, and so I've been having this Fitbit on, but gosh, I was gonna look for my watch, but I just couldn't find the time.
Okay. Okay. Yeah. That's all you got after a week.
Yeah.
All right. So let me ask you this. Do you know what's happening when you sneeze and fart at the same time?
No.
Your body is taking a screenshot.
All right.
All
All right.
right. All right. So here we go. 5-minute chart
All
of
right.
the S&P. And we see that right now we did have a gap opening lower, selling off right now. It almost feels that maybe we found some support here. We had a little bit of a bounce, but we already had this earlier today. So right now, moving lower again. Right now, look at the indices. The Dow hanging in there. With this rotation, we see that the NASDAQ is down 3.5%. Dow also being hit because we have Apple in the Dow. And who else do we have in the Dow? I believe Nvidia is now in the Dow. So we do have a few tech stocks in there. S&P in the middle, down 2%. The Russell also hanging in there, and we see that the VIX is climbing right now up 13%. So far, the market's still in free fall. Nothing is going to stop them right now. Let's see when we have some buying stepping into the market. But for now, I mean, all we see right now is, especially in the tech stocks, sell, sell, sell. Right. Well,
Yeah, it's going to make for an interesting week.
it will be an interesting week, especially with the inflation data coming up. So hope that you enjoyed today's show. If you did, do us a favor and give us a like. There's probably a way to like this show here somewhere on YouTube, Spotify, Apple Podcasts. If you also enjoyed it, share it with somebody who might find this beneficial. And then if you can, leave a comment and said, who told the better dad joke today? Anyhow, with that said, have a great rest of the week, and we'll see you next week.
Happy trading, everybody.